So yeah, so this right here in the top left is the 15 minute. Right here is the 60 minute. To the right is the 5 minute. Down here is the 100 second, the bottom left, and then right here is the daily chart. So the way I look at the market is I would say more technical than you need to be profitable because of the journey that I took. So there's a lot of things that might seem like, oh, I know a lot of information, but it's not necessarily that I know a lot of information. It's that the market is what you call fractal. So what happens on one time frame happens on every time frame in the same manner, and it kind of ebbs and flows that way. So because I view the market in 2 and 3 bar patterns primarily, for me that's the tempo of the market. So that's why I look at the 15 minute, the 5 minute, and the 100 second. So the way that I know the 5 minute to move, the 15 minute does the exact same thing, just slower. And the 100 second does the exact same thing, just faster in intervals of three. And what's the most interesting and crazy thing to me about the market is everything always plays out the way the probabilities favor. And if the low probability thing happens, all the probabilities play out in each time frame simultaneously. So a lot of the decisions I make is based off just understanding price action and just starting from the top and working my way down. Everyone's way of doing that is going to be different. There's no one way to do it. And I really want you guys to get into the mindset of don't try to trade exactly like me, right? Your goal is not to trade exactly like me. Your goal is to find what works for you and do that and execute that at a high level. For example, Ariel doesn't even trade the Nasdaq. I trade the Nasdaq. If that works for her and she's more profitable trading a different instrument, cool. Some people like trading gold, some people like trading crypto, right? I'm just giving you what works for me as a foundation, so that let me pull this up. So that is there anyone in the okay. Yeah, it's just a foundation so that you can create something for you that works for you. And that's perfectly fine. That's perfectly fine. There's things that I do in the market that you won't do, and there's things that you guys are going to do in the market that I won't do. I can have a 90% win rate and lose money, and you can have a 10% win rate and make money. Your goal is to find who you are in these markets. Okay. So I wanted to start with that. And the reason why I'm starting with that is because the way I create my bias is based off of my beliefs of the market. And my beliefs of the market comes from 6+ years of observation, seeing things over and over and over. It's a level of repetition. And when you learn something and you look back at the previous charts, you'll see how the market functions as a machine. There's an input and there's an output, and there's this equilibrium that just there's always balance. The From the top of the charts, from the daily chart all the way down to the 1 minute chart, they just always find this harmony. So with that being said, for me, looking at the daily chart right here in the bottom middle, the daily chart had an outside bar. And usually when you have an outside bar like this at the end of a bear trend, you usually get one more push down and a reversal, right? This is like the start of a reversal. So my thought was that today was going to be an inside bar. I didn't think that we were going to go below the low of yesterday's low, and I didn't believe we were going to go above the high of yesterday's high. And I thought that depending on the tone of this bar would determine what happens next. So since this is a good bear bar, there's probably going to be sellers below expecting lower prices. If this bar would have been bad for the bears or good for the bulls, then going into tomorrow, we probably could have expected some type of bullish move. But what's more likely is that this low of today is going to get tested somehow, and then we're going to have to see what the market does. Because of the nature of what's happening, we're currently in a trading range, and this pattern is an inside bar, outside bar, inside bar. So there's consolidation, expansion, consolidation. So there's likely going to be some type of expansion. We just don't know what direction it's going to go because the chart hasn't given us enough information. Other than that, we're in a tight bear channel, so more to the downside is likely. But in the environment that we're in, we're getting into a buy zone of the market where buyers are going to be looking to start buying down in this area, right? Because if we look at this whole move and we look at the 50%, around here is where this 50% is going to be, where buyers are probably going to enter the market. So for me, my bias was after I seen how the market opened, we had a big gap up and then a reversal. When that happens, we usually end up in a trading range for the rest of the day. So depending on how that trading range plays out determines your expectations for the day. Today was one of those days where it was just really volatile. But the market did what the market was supposed to do. Chris was talking about what move were you talking about, Chris, today on the 5 minute
It was that the signal you just clicked right there.
right here?
Yeah.
Yeah, so this is just how I trade and going off what you put in the chat. I don't know what your rules are. I know for me, my rules are if I'm looking at this, this is the red area. I don't like taking trades within the first hour of the day because things that tend to look high probability end up being low probability, and things that look low probability end up being high probability. And it's just a lot to think about. So for me, even though I can trade in that environment and sometimes I do, I would say about 90% of the days, I just don't trade the first hour of the market. That doesn't mean that you can't. If you have a system and that's what you trade, then this was a phenomenal trade. It just depends on your guidelines. For me personally, I would not have taken this trade because of that reason. And I only ever take an entry one time. So this second entry here, I wouldn't have took it because the trade already played out and my expectation is based upon this first leg. And my expectation is that when we get this type of breakout, there's going to be a pullback and some type of second leg. So if we have a 50% pullback, I feel like these bull bars, this move up here that tested all the way up here to make the double top, this was sufficient enough for me or the Bulls to be satisfied a second leg of this move. Now, this move was strong, even though the first bar is not the same direction as the Bulls. If you look at it, it fits our pattern. It's a higher high, higher high, higher high, higher low, right? So this is a bull micro channel. I used to trade these with supply and demand. So what I used to do is I would draw like a box down here and then I'd buy above one of these bars. But it's just not something I do anymore because the level of management that it requires is something hard and difficult to code systematically. This is more of a discretionary system, and I try to stay away from discretionary systems as much as possible because I don't make money. And it's as simple as that. I would prefer to be discretionary, but I'm not. I don't make money doing it, so I just don't do it. So I think this was a great trade. I think that this is a trade that I would take if I was trading 2 years ago. But, you know, I would just recommend that you look at strong early signals and see how many times it gets tested or how it holds up throughout the day. And if you're satisfied with the results of your back testing, then find a system around it. If you get an early move, I mean, I'll give you a simple system. So the pre-market has a range. So this is the pre-market range before the market opens. And then depending if it's a upside breakout or a downside breakout, you can trade any pullback. So this was an upside breakout. This was the breakout that caused the upside breakout. So this is going to become a level of support where previously was resistance, aka a flip zone, and then you can just do what you were showing and you just buy every time it gets into that area because you know that the market is in a trading range. And if we're in a trading range, you're going to buy low, sell high, and scalp. So this is the buy zone of the trading range. This is the sell zone of the trading range. And this is the control price of the trading range. You know that there's going to be buyers down here throughout the day, and you know there's going to be sellers up here throughout the day. This is also a triangle, which means volatility is contracting. And usually, what happens after volatility contracts is that it expands. So, there's going to be some expectation for a breakout, maybe to the downside, maybe to the upside. We don't know. Now, all of that is fine and dandy if you want to go down that rabbit hole and you want to trade like that and you want to be thinking all those things real time discretionarily, because that's what you would have to do if you trade these type of signals and you trade in those type of environments. Whereas my preference is I would just wait for the first hour of the day, draw some type of zone that presents itself, and just trade it blindly depending on what the market's doing. If I get something that's real strong like this and I start getting closes in the danger zone, I'll look to cut it early. If not, I'll look for my profit targets. And if you look at it just from that perspective, after the first hour on the 5 minute, this strong signal, it took some drawdown, but it won. This strong sell signal, it took some drawdown, but it won. This strong buy signal, it took some drawdown, but it won. And it's just that simple. You can just wait for price to get to the blue line, take it, and wait for your profit. And except that in trading range days, you're going to get deeper pullbacks, right? So notice this pullback went to the danger zone. Notice this pullback went to the danger zone. This pullback went to the danger zone. This pullback went into the danger zone, right? That's the tempo of the market. Every trading day is going to have its own different tempo, and you just kind of have to figure it out as the day goes. Like, like this is a 2 bar reversal, then a bear bar, then 3 bars that failed, then a bear bar, then 2 bars, then a bear bar, then 2 bars, then a bear bar. Then you get some buying, then a bear bar, and then 2 bear bars. So it's kind of like the bulls have small reversals that immediately fail. Small reversal, immediately fail. Small reversal, immediately fail. Small reversal, immediately fails. And that was the tempo of this day because of the dominant feature of the market, which was this strong 2 leg move right here. So, on this day, you shouldn't really be looking for buys. But if on the pre-market there's a buy zone and you want to take it, you can do that. I'm just saying, looking at zones pre-market, for me personally, is not something that I do. And I'm giving you both sides. It's not something that I do, but it is something that you can do and be profitable with. So I don't think it was a bad trade, pretty
It just
much.
takes a little bit more maintenance.
A
If I'm
lot, a lot more maintenance,
right.
right? And today it worked out for you. Great. Take it as a blessing, take it as a gift, but don't get in the habit of doing things real time in the market that you're uncertain of, because you might do it that one time and make money, and then the next time you do it, you blow your account. That's just
So
that's just the nature of the beast.
so the pre-market signals, they don't hold no weight to like for you. You don't
I,
even think about
I
them.
I'm not gonna say they hold no weight. They hold weight. I just don't trade them. They hold weight in the sense that I look at it and I'm like, okay, this is a strong buy move. So I'm expecting some type of bullishness to it. The only thing that I'm gonna trade pre-market is a 15-minute zone. I will not trade a 5-minute zone pre-market.
Got you.
But like I said, there's nothing wrong with it.
Right.
It's just get some more screen time with it. And the best way to know what trading strategy works best for you is take type 2 trades where you followed your system and you took a loss. Feel those losses. When you get those good losses, if those good losses is something that you can emotionally calibrate and come back to and take the next trade and then not influence the management of the next trade due to your prior trade, that's your comfort zone, because you have to remember trade probability is like flipping a coin essentially. If you flip a coin, you don't know if it's going to land on heads or tails. You know that it's 50-50. But in 100 coin flips, the probability of getting 50 heads and 50 tails is actually low probability. The high probability outcome is that it's going to actually skew in the favor of either heads or tails. Now, with trading, you have a weighted coin that, let's say, 80% of the weight is heads, and you flip the coin. 20% of the time, it's going to land on tails. What does that feel like to you? Is it something that makes you want a revenge trade, or is it something that you just be like, oh, okay, whatever, and then just go on to the next trade? You always want to be in a regulated state of mind. You don't want your heart beating fast. You want to, be calm and talk to yourself. And I don't want to say boring is the word because trading's not boring, but it becomes so repetitious that you just execute. You want to get to a point where you're just executing. And, my cousin and I have created systems where this is what you do when this happens. And when it happens, you do the thing. And we have thousands of trades and statistical data to back that up. So you got to think about it. When you're playing a sport, you don't practice during the game. You know what I'm saying? You're not reading the script during the movie. When it's time for you to show up, you should already be prepared. When you go into the market, you're not thinking about what you should or shouldn't do. You're not thinking about what trading system you might or might not trade. All these things are predefined. So when you get into the market, you say, this is what I'm doing today. I have five different systems. I don't trade every system every day. I go into the market and say, today I'm looking at these two systems. And sometimes the system I'm not looking at presents a trade and it wins. It doesn't matter. I wasn't trading that day. My defined approach was written and I have to stick to it. And my struggle sometimes is that I create a game plan and I see that there's a more reasonable audible and I go to the audible only to see that the original game plan was the better thing. So for me, my what I'm doing in my trading now is I'm no longer allowed to call audibles. That's my primary focus. Once I make a decision on the trade that I'm going to take, either I take that trade or I don't take that trade. But I don't take a different trade in replacement of it. I can't call those type of audibles anymore. I have forbid myself from doing that. I am not allowed to do it. And if I do it, my trading day is over.
Mm.
And that's just how you just have to create beliefs for yourself. And when you get into the market, all you do is execute them. That's it. You should execute it fearlessly. And I know what it feels like, especially in the beginning, to not have that certainty. And, we live in a sea of uncertainty. Past price is the best predictor of future price, but we still don't know what price is going to do. But you have to believe that the decision you make is what it is. There's no reason to hold your stop beyond where your stop loss goes because it's like you don't know the outcome of the trade. You just know that there's a probability. And when you put on this trade, what you're saying to yourself is based on my research, I know that this trade is whatever, whatever. And the max amount of money I'm willing to put on this trade is this red line right here. And that is my edge. Anything other than that takes away from your edge. So once you put that trade on, the trade is on. There's people like, oh, they'll cut it early right here. Feel like they did a good thing, only to see it turn around and hit their profit target. But cutting it right here is not part of the system, right? You didn't truly accept the risk that was put onto the trade. It's like, okay, I have a deck of cards. I shuffle the cards and I say, okay, there's 52 cards here. One of them has $1 million on it, and your bet is $100, and you brought $500. And then you say to yourself, okay, I bet five times and I lost every single time, right? But they told me there's $1 million in here. So you know what? I'm just gonna get the rest of the money. And you get whatever amount of money it is that's needed to bet $100 on 52 cards. You get $5,200. And you give it to the salesperson and you go through all 52 cards and there's no $1 million. That's what it's like. You deceived yourself to believe that what was being sold to you was true. But you told yourself primarily, I'm only going to risk this amount. That's what the market can do to you. You can be like, okay, I'm gonna risk another 100. Okay, another 100, another 100. Now you're pot committed and you're like, screw it. I might as well just blow this account because there's no way I'm gonna recover this by trading normally. So either I see this through or I don't, and it blows your account. So, create a defined system, and whatever that system is, just stick to it. And that's what it is. So, you know, but that was a good trade.
Appreciate that, sir.
Yep. But yeah, that's all. The call was originally for me and you. So unless Ariel or Todd has any questions, we can head on out.
Um, one first question.
Yep,
You're
yep.
when you're trading, this is what your setup looks like?
Yeah.
Okay, cool. Second question, which when you were explaining the difference between what Chris would have to do to trade, which was he'd have to create the zone before the breakout started. And you create the zone after the breakout started. It's confirmed.
You can't draw the zone before the breakout because there's no breakout.
Well, I was sorry. I'm just speaking from like what you were showing.
Hmm.
Like like let's say you're looking at the post market, and the part that you were showing where it's like you would trade that part of the like what you were showing us what trade you would take.
During the
The
day over
Yeah,
here. Uh-huh.
yeah,
Hmm.
yeah. You're talking about trading blind. Is that like the system but more advanced?
No, it's trading blind. It's the system, but more dumbed down. The complete opposite.
Mm.
If you're trading blind, you're trading like Forrest Gump. It's like well, I don't trade the 5 minute like this, but let's say that this was the system I was trading on the 5 minute. And my system says, hey, based on whatever data I get, every time a trade happens, I'm gonna buy right here if it's a bull signal, or I'm gonna sell right here if it's a bear signal. I'm gonna leave my stop loss at this location. I'm gonna put my profit target at this location, and I'm gonna walk away from the charts. And whatever happens, happens. Either this profit target gets hit, or this stop loss gets hit, or the day ends and I have a small winner or a small loser. That is the absolute most basic way to trade. Boom. This happens, you put a sell limit order right here. You put a stop order right here. You put a profit target right here, and you simply walk away from the charts and you do not interact with the market at all. That is trading
Mm.
blindly. Here's a buy signal. You put a buy limit right here. See me, if I see these two bars, I know this could potentially be a third bar. I would pull the order. That's not trading blind. That's having some discretion. Trading blind is, hey, I see these falling knives. I don't care. I'm going to catch them. I'm going to put my buy, my stop, my target, and I'm going to bang it. And when I come back, either I won the trade or I lost the trade. That is how I want you guys to trade the 15 minute when you first start on sim for a week, which is what I've been saying. After that, then you add all the nuances. Let me open this up. After that, then you add all the nuances of not the trade management, you add the nuances of avoiding trades. Let me stop taking the dumb ones. Then you're gonna know, okay, this is a dumb trade to take. This is a good trade to take. After you stop taking dumb trades, then you start managing the good ones to increase your probability because you can have where the price action is going in your favor and then you have a random adverse bar like this and it runs your stop, right? But if you have some type of management system that says that if I have two tests in a double top and then the double top gets tested and we don't break above, I cut the trade. Is that something I do? Yeah, but that's more advanced. We don't got to worry about all of that right now. Nobody cares. It's not going to make you any more money, to be honest,
Mm.
because what ends up happening is you will end up inevitably cutting a trade that wins.
Mm.
Yes, you're cutting trades that lost, but you also are cutting trades that win. And those winners offset those losses more, which will cause the losses to weigh more on your P&L, especially if your stop is larger than your profit target. So once you go to cherry picking trades and doing stuff like that, it's not going to be beneficial for you. So that's why I'm saying at the beginning, trade on sim blind, so you know there's no real cost to it. But if you're already experienced, you already have time in the market, cool, do what you want at the end of the day. I'm just giving a recommendation on what I would do if I was teaching myself for the first time because that's what worked for me. What works for me doesn't necessarily work for you. But what is true that there's certain market beliefs when it comes to probability that you have to accept. Otherwise, you'll never be at peace within the market. It never, like, I hate the phrase that they say, it never gets easier, you just get used to it. The getting used to it makes it easier.
Yeah.
You know what I'm saying? Like when I'm putting on a trade, I don't put on a trade with my heart beating fast with this level of uncertainty and nothing. No, it's just my trade showed up. I almost have to calm myself down. Like it excites me because it's like, okay, my system is here. You know what I'm saying? I spent all these hours coding it. You know what I'm saying? Let me see it play out. Boom, went straight to my profit target. I'm done for the day. That feels great. That feels great, but that's not what it's about. So that's the emotion that I gotta check. Okay, boom, my signal played out. I'll tell you a trade I took. Boom, my signal played out. I took the buy. My profit target's up here. All these lines mean something. It almost hit my profit target, didn't hit it. So my rule is I get out, only to see it go to my profit target.
Mm,
I see a sell happening. I try to take the sell above here. I see it going against me. I don't like it. I get out only to see my trade win and go immediately into profit. So I had to go to the lower time frame to catch part of the move. So instead of getting it from up here because I cut it, I had to get it down here. And then, that cut into my profit a little bit. Am I mad about it? No, that is the system that I created to keep myself safe.
Mm,
And you have to create something to keep yourself. I know what I do that causes me to tweak. I know what happens right before I revenge trade. I know how it feels. And when those feelings come, like today, I text my cousin. I said, "Yo, I won the trade, whatever, whatever. I'm $100 from payout, but I feel that emotion of, man, I'm about to get my biggest payout. Let me just hit. I feel it. So I'm just gonna shut down the charts. I'm done trading for today. And if I go into the market with the mindset of I just need $100 to get my payout, I'm not trading tomorrow and I got to sit with that for the whole weekend, right? That's just how I am because I know if I trade while I'm in that state of mind, I,
you're gonna
I,
reach.
yeah, I'm gonna start taking trades that aren't there. I'm gonna start doing things that I shouldn't be doing. And instead of letting the trade come to me, I'm looking for the trade. And I just have all these safety nets in place, not because I'm some super trader. Nah, I'm not. I'm susceptible to the exact same things that you guys are susceptible, whatever that word is. You know what I'm trying to say, damn it.
Acceptable, yeah.
Yeah, right. So, um, because I know I'm vulnerable to those things, whenever the emotion arises when those things happen, is immediately turn off the charts. I have more emotions that tell me to turn off the charts than I'm allowed to trade with. You get what I'm saying?
Yeah, I get what you're saying.
And whenever I feel those things, I tell myself I'm not allowed to trade.
I feel like that's what makes you a super trader because like anybody can trade, you know what I'm saying? But it's like it's hard to hit the brakes. Like it's you want to keep trading, keep trying to find something,
But
and like
my question is, when you say it's hard, what does that mean?
oh, that's rhetorical, or you're asking for real?
I'm asking for real. When you say it's hard, what does that mean? It's hard to pump the brakes. It's hard to not trade. Like, what does that even mean? Like, I don't understand. Like, I'm being for
Oh,
real.
oh well, because like yeah, I guess it's that FOMO. Like you know, fear of missing out. You want to trade, like you're trying to get better, and so you want your reps. You know, I guess that's where I'm at. Like I want as much reps as possible.
What are you missing out on?
The like missing a rep because like feel like missing a rep, I'm not getting better.
Yeah, but you could just go to Market Replay, download some Market Replay, and trade a random replay day and get
Mm,
your reps in like that and back test like that. You don't have to trade in the live market to get in reps. You can download NinjaTrader data from here, you know what I'm saying? Go to connections, go to playback. You can select any instrument, you can select any date, you could download it, and then you could trade that day,
mm.
right?
And you
I
can do
really,
that while the live markets are going, right?
Yeah. Yeah, of
Mm,
course.
I
Of
like
course.
the self-awareness too, because I feel like the control of your emotions is not only relative to the charts.
Yeah. One thing you're gonna see is the way you live your life in real life is the way that you're gonna trade in the market.
mm,
Whatever you got going on in real life is gonna somehow translate into the market when you trade. Guaranteed. If you're not even keel, if you're not just feeling like if I'm not feeling like I'm at my best to execute, I'm just not gonna take a trade. Win or lose, I don't care. Like I'm at a point where I have done enough, lost enough, blown enough accounts, made enough money, lost enough money. I just went through all the emotions, made all the mistakes that you guys have probably ever made and more, most likely more. And I always came back to the same conclusion of simplicity.
I wanted to ask if I'm trading and I'm just sitting around waiting for signals, I'm still doing something wrong.
What do you mean?
Like when I'm in the tomorrow live markets and I'm just looking at the charts, waiting for a signal to pop up, looking at market context, but like I don't do anything until a signal pops up. Is that like am I doing something wrong or is like am I doing something? Am I following the system?
I don't necessarily know what you mean by are you doing something wrong because there's nothing for you to do right or wrong. It's for you to enter into your trading day with a set goal in mind
Hmm.
and staying disciplined to the goal that you created for yourself. So if your goal is to watch the 15-minute chart, see a signal, only take the midpoint pullback and trade it blindly, and you did that, then you're doing everything right. But if you try to manage the trade and cut it in the danger zone and scale in and hold it past the profit target, not go to break even, then you're doing something wrong. However, if you go into the trading day with the goal in mind that you want to be more discretionary. So your goal is that you're going to manage the system based on dynamic management. You're going to add a second position if it draws down 50%. If it closes in the danger zone, you're going to try and get out break even on your first entry with the profit on the second. If it doesn't close in the danger zone, you're trying to get out at your original profit target with this additional position. If you decide to hold for a further target, you put your stop at break even, you take partial profit on your first entry, and you let the second entry go to any of your other predefined profit targets, and you stay disciplined to that, then you're doing the right thing. Or you don't stay disciplined to that, then you're doing the wrong thing. So I
Mm,
don't really view it as right or wrong as a general guideline of are you trading the system properly. You have to define what that means to you and what your goals are for the day and whether or not you stay disciplined. And that's it. Like, and you got nothing to prove to nobody because nobody really cares. It's just you versus you.
I got to work on some goals then because like I guess my goal has been I will say my goal has been to I guess be more discretionary, wait for an indicator and then you I guess discretion in the sense of like if the opportunity comes to add to my position and the market context agrees that I can, I will, but like I guess it's more trade management.
So when I say market context and when you say market context, I know for a fact you don't mean it the way that I mean it. So when you say market context, what do you mean by that?
When I say market context, I check the other time frames to see like if I'm on the 15 minute, I'll check the 5 minute and see like what it's doing. I'll check the 60 minute to see what it's doing to make a determine like how I'm gonna trade the 15 minute because I'm only trading the 15.
What determines that?
Like what determines like the trade in that
No, you
situation?
said you said you're gonna go to the 5 minute to determine whether or not you're gonna trade how you're gonna trade or if you're gonna trade the 15 minute. What determines that?
Well, like if I'm in the 15 and like let's say a strong bull comes up,
Hmm.
I'm going to like first I wait on the 15 to see if if it's going to get into the entry. Once
Hmm.
it gets close to the entry, then I go into the 5 minute and I see what's happening in the 5 minute. Like
Hmm.
is it bullish as well? And then also then after that, I go into the 60 minute and see what that bar looks like.
So let
Um,
me ask you this: when you say you go on to the 5 minute to see if it looks bullish, what the like for you? What is bullish for you? Like, do you have a defined something that like is a pattern, or are you just going off how you feel when you look at the market because you see a bunch of green bars?
what I do is I look at the where are we? Where's the 5 minute at? Is it like at the top of a trading range? Is it
Okay.
at the middle of a trading range or the bottom of a trading range?
Hmm.
And that'll determine like is there a breakout in the 5 minute? that'll let me know. And that's why I knew I should have scalped at that
Mm,
last trade that I shared the other day because um I we were in the middle of a trading range and
hmm
so there was no breakout happening. So I literally told myself, I was like, I think I messed up. This trade is gonna pull back
hmm
and not come back to my profit target. And that's exactly what happened.
Well, I don't think there's anything wrong with that. As long as everything's defined, whatever you're saying is bullish, you have a definition of what bullish strength looks like and bearish strength. And as long as you're consistent with it, there's nothing wrong with it. The only thing that makes it difficult is that it's discretionary and it's not measurable. So you're gauging off of, whatever prior information or prior reference you've had with the market. And, in my opinion, I don't necessarily think that you've had enough screen time to trade that discretionary yet.
Okay.
But if you feel comfortable doing with it, I mean, if you feel comfortable doing it, then continue to do it. And it's kind of like you're learning how to swim while you're thrown in the deep end.
Right.
Just be open to being wrong, understanding why you are wrong, and be open to changing your beliefs of what you once thought was strength or what you once thought was weakness. Because sometimes it's a bit counterintuitive and you have to be able to know when that is. And that's just going to come from experience. You can't learn that in a book. If you really want to accelerate that process, look at the 1 minute. Just look at it. Just look how it moves. Just watch it. Just like talk to yourself. Like this is the 100 second, but it's like okay. Let's say you're looking at the chart. Uh, let's say you're looking at the chart and just talk to yourself and just even if you're 100% wrong, even if what you're saying makes absolute no sense, even if it's fool's gold, just
Right.
talk to yourself. Be like, okay, we got this bull move, we got three pushes down, this is a bear move. Oh, the chart just moved. Sorry, it's a bear move. Where was I? Yeah, it's a bear move. We're at the bottom of this range. More than likely, this is going to fail and get a reversal. Okay, it didn't fail and get a reversal. It closed strong. There was probably people who bought here. If they bought here, they're trapped. Damn, it's going against them again. They never got a chance to get out. What would they do next? So let's think about it. Let's say you bought here, this happened, you never got a chance to get out, this happened, this happened, this happened. What do you think bulls are gonna do? They're probably gonna try and get out of their position. Okay, boom. So this is probably them getting out of their position. Now this support is now gonna be resistance. So, there's probably going to be people selling somewhere in here where the bulls got trapped, right?
Mm-hmm.
So, just make up a story. And what you'll come to find out is that oftentimes you'll be correct.
Okay.
But even if you're wrong, see how many times you're wrong. And then you're going to start to see patterns. You're going to say, okay, well, when it's a big gap up and a weak pullback, we're probably going to get another strong move up.
Right.
Maybe that's the thing. Like I can't sit here and tell you everything I've seen in the market, but I can tell you is that I still learn new things every day.
Right. Definitely gonna be rewatching this.
Yeah, so I think that thinking if it's a good trade or a bad trade, if it was right or wrong, what's the outcome? Did you win or lose? I'm more process focused at this point in my trading career because I know that the outcome has already been proven. I've already done enough research and I know that, hey, 80% of the time or more, I'm going to be making money. And the only thing I have to do now is execute my system almost like a robot. And the times that I add into discretion, I have to accept that there's a percentage of human error that I cannot overcome that can be detrimental to my overall P&L. And sometimes it's going to be beneficial. And as long as I can do more reasonable things than dumb things and I can remain profitable, then in the long run, I should make money. So my goal is to not make money per se. My goal is more so to do what's reasonable and right according to the guidelines and goals that I set for myself for that specific trading day. And day to day, those goals might change. Day to day, those procedures might change. But ultimately, The process is follow the process, no matter what the process is. And as long as I do that, then I did what I needed to do. And my P&L is just a byproduct of a probability over a series of 100 trades. I don't necessarily focus on this one loss or that one win or this one win. It's nice, but my system is based over 100 trades. What's the likely outcome? And for me to get there, I have to shoot 100 shots. So I'm just going into the market and I'm shooting my 100 shots. That's it.
One more quick question. Just
Yep,
a real
yep.
simple one. Sometimes I like to take off the indicator just so I could kind of like start to realize the signals myself. Is it like reasonable, or my question really is, am I just, how can I say this, like three candles that meet the criteria as far as closing above the 60%, higher highs, higher lows, or lower lows, and of that nature, or does it have to be like a certain bar number, if that makes sense?
Have you gone through all the mentorship videos yet?
No.
All right. So the simple answer is it doesn't matter really at all.
Any three consecutive?
Any three consecutive. It's called chasing. And it's not something I recommend that you do, but what's gonna happen is you're gonna run into a situation where, um, let's say, okay, boom. So you got this 1, 2, 3 bar pattern. Then this bar happens. So then this can be a 1, 2, 3 bar pattern, right? Um, I would have liked a more protracted move, but for the sake of discussion, let's just assume that this bar closed good as well.
Right.
And this will be another one, 1, 2, 3. So what ends up happening is if you have too strong of a signal and you see the market getting away from you, you can just keep on clicking on the next bar, right? And then now this is the midpoint of this 3 bar series. And now this is the midpoint of this 3 bar series. And you can chase the market in that way. The risk with that is no matter which midpoint you get in at, your stop loss is always at the original location. So what ends up happening is as you chase the market, you increase your risk and you minimize your profit.
Got you.
So I wouldn't recommend you chase because some of your biggest wins is going to come from that, but also some of your biggest losses are going to come from that. And the emotional feedback that you'll generally get from those type of losses tend to be overwhelming for beginners because even at this stage in my career, I don't do it because you work hard, you work hard, you work hard. You've been trading perfect for 3 weeks, and then you just take this one big loss that just mitigates all your profit. And then you're doing good for a month, you're doing good for 2 months, and then you just take this one big loss that mitigates all your profit. I don't like how that feels. So I just don't put myself in that situation to even experience that emotion.
Cool.
I just don't do it.
Okay. Appreciate
Yeah.
that.
Yep. All right. Catch y'all next time.
Y'all take it easy. Stay blessed.
Yep.
Yeah.